And welcome to India Market Open. It's Tuesday morning. It is a bank holiday, but equity markets are working, and I think traders, investors are going to be quite excited. The solar eclipse, which we were all very afraid about, turned out to be very lucky for the bulls.
You were afraid?
Apparently, I was supposed to be.
Oh.
Supposed to be, okay. Firstly,
No, but second largest Google search yesterday was why do my highs hurt because of the solar eclipse?
the third largest was why is Trump media falling the way it is? No, but all seriousness, to all our Bori friends, Eid Mubarak. Samina, Eid Mubarak.
Thank you.
To all our viewers, best wishes for a great Gudi Padwa as well. So it's a great time, right, this week. So
The festive sort of and change of season kind of time is on, and it's looking like a good season for the markets as well. I was just spotting the implied open before we started, and we're looking for another good day, which is great because it's quite blah in terms of what's happening globally.
With stocks and even stocks, right?
Yeah,
Quietish.
but we're looking perhaps for a good start. Quickly take you through what it looked like overnight, and think about it. The US 10-year is firmly above 4.4, but that doesn't seem to be a big concern for Asia or India right now. It was a flat trade in US markets, range bound overnight. All eyes are on key data, which will come, most of it tomorrow. You're going to have the CPI inflation number for the month of March. You will have Fed minutes, which will be out on Wednesday as well. But the US 10-year is already at its highest level this year in 2024 at 4.42. And that is continuing to tick up because of all of the factors. I think over the last couple of weeks, the idea that, yes, there has to be a rate cut in June is diminishing, and that perhaps is reflective. Just a quick look at crude, because crude is the fly in the ointment right now. It actually has cooled off to about 90 a barrel for the Brent, because Israel has moved out of South Gaza. And that is being seen as perhaps things will get better. But that is one factor that you can't really say much about. Let's pull up Asia and see what's happening there. Asian cues are largely positive, and that's something that hopefully we'll see in our markets as well. Quick look at fund flows before I hand it to Niraj for the trade setup for the day. And, yesterday was all about domestic investors again, and the decent sort of close we saw was powered by domestic investors. FPIs, after one day of buying, turned sellers at about 685 crores. The question really, Niraj, is do we see that same sort of buzz in pharma, auto, those sectors which have really been working?
stars gaining consistently for the last few days. I mean, you kind of hit it right on that, because if you look at yesterday's trade, yes, strong move in autos and strong move on the index, but the mid caps were quiet. And to an extent, Reliance seemed to be the big star of the day yesterday. I don't know if it preempted a small upgrade from Morgan Stanley or otherwise, but Reliance did really well in trade and was the key star, which helped the Nifty stay higher, because if you look at what happened to the mid cap and the small caps, they didn't do as well. And this point contribution gives you an indication of what Reliance did and what autos did in trade yesterday. The two pockets which actually held the index higher, while the banks didn't do as well yesterday. But Tamanna is right. If you just look at what's happened for the last few days, real estate, autos, pharmaceuticals, three pockets which have been consistently gaining, and you got to give credit there. The small other thing, and difficult to kind of really talk too much about levels because we are consistently hitting those highs. The put bases are consistently moving higher as well. So in that sense, if you just look at the call put option data, it'll keep consistent over the last few days. You will see that bit of an uptick coming in, and Agam will talk about it in the FNO segment. But frankly, levels won't matter as much as individual pockets will. Just one last thing on the trade setup in terms of sectors. We've identified the good ones. Yesterday, Dinshaw Irani happened to mention about QSRs, and then I spoke to a couple of people in the evening about whether QSRs, which have been laggards for such a long time, last couple of quarters at the very least, do they make a compelling argument currently? Maybe IPL, maybe valuations relative to history, all of that make them a pocket where some people are making a serious look at. So do watch out for that bucket as well. And guys, we were talking about the capital marketplace for so long. Today, yet again, I think there's a Jefferies note which is upgraded 361, Nuvama, etc. So those whole non-lending financial space, firmly in focus as well from a sector perspective.
Day 3 running.
Yeah.
You had IIFL Finance that did really well on Friday. On Monday,
and on Monday
we
as well.
saw Nuvama, Anand Rathi play catch up, and today again I think the party may continue.
I was just wondering, I don't know if you guys have heard anything on IIFL Finance, because for a stock which has been badgered out of shape for all the reasons that were well known.
And which haven't changed. Those reasons haven't changed fundamentally.
But 2 days on a trot, this has done well. Is something changing? That's the key question, because we know that about a month and a half ago, I think one of you did the conversation with them, if I'm not wrong, but 1 month and a half ago, they had said that they hope that they'll hear some bit of resolution coming in month and a half. I don't know, it usually doesn't come so soon. In fact, in the interview, they said that they expect normalcy by September. But could we hear some sound bites? That's a key question, because the price action says
buy
something.
the rumor, sell the news. That's probably what's happening in IIFL Finance.
But perhaps the fears that what this would do to the fundamental business have been unfounded. It's not fundamentally impacted them as much. Could be, but even the same kind of buzz in small finance banks in your entire financial space has just been astonishing. And I think as we're going into result season, that's going to be the next big trigger. We're perhaps set for a pretty good Q4 and FY24 set of numbers, on the face of it at least so far. So that's one to look out for.
Yeah, but I think with banks as well, and I saw this article that came in which said that deposit growth for banks stands at a 20-year low. So while credit offtake looks fantastic, deposits are not keeping pace, and I think that could be a little bit of a disappointment.
Oh, your deposit updates are
they still stay at a 20-year low in terms of relative performance.
Okay.
So credit offtake looks great, and which makes sense. Look at interest rates, right? The kind of rates you're getting in a fixed deposit today don't actually, not very compelling. At 40% tax, you're taking home 3-4%.
Yeah, but
post-tax.
They're
BAF
better than
yesterday
they've
raised the
ever
rates.
been,
To 7.2?
No, 8.38 for the highest maturity. So I think
And
they're
I take
increasing the rate.
40% off from that. I go home with 5%, which is not even an arbitrage return.
Before 5 years for fixed deposits.
Fixed deposits are tax-free after 5 years?
Yeah, if you keep them, they get tax-free.
No. Sorry, I don't know this.
A long term, if you keep a fixed deposit over a period of time, you will not pay.
No, I don't think so.
One way or the other.
But it's deposit growth
is an article I said. No, I think there is a credit offtake which is taking place, which we have been seeing. But deposits are not growing in line, and that could be very well connected to what's happening. Which is happening in equity markets. All that money that was going into fixed deposits,
I think that's a great
are now
conversation.
moving into equity markets.
That's a great conversation to have, because deposit growth numbers, at least as far as the business updates are concerned, is what is exciting people. It could be relative. It could be over a 20-year period. It's lower, but in terms of quarter on quarter, looking much better. But then let's get to the
stocks. There are enough and more, a few actually, to watch out for today. Largely speaking, you're expecting a marginal gap up. Remember, global cues are positive. Yesterday's rally was really strong, recovery, or rather the little bit of consolidation that the market stepped out of to close at record highs yesterday was interesting. But I think advisors are still telling their clients that you want to exercise caution, and that's what's important. So while everything is looking good for now, we are pricing in a very strong outcome with the general elections. Business updates have been looking promising. Expectation of a solid Q4 is online, but be cautious and be careful, right? Because you don't want to be caught on the wrong side at this stage, whether you're being advised to take profits off the table, but trailing profits is one way, or the better way to play this market, at least at this stage. So don't get carried away is all we can tell you. In terms of stocks, remember, the broader sentiment is largely intact because of the sentiment around the general election, but stock-specific order wins is what's been driving trade over the last couple of days. And we'll see that this morning too. So I'll start with Dilip Bilkon. It is the smaller one on my list of the 3 stocks I have this morning, but I'm mentioning this one because they've emerged as an L1 bidder for a 1,092 crore project by Haryana Rail Infra Development. The stock has up about 7.5% in the last 1 month, went home flat in yesterday's day of trade, but it wouldn't be a surprise if the counter sees a pretty solid gap up in today's day of trade until the macro sentiment, of course, changes for the street. Well, apart from that, you have JLR. So luxury car sales still looking good. JLR has reported over 20% YOY growth in its full year sales on improved production and sustained global demand. Wholesale volumes of 1.1 lakh units in the fourth quarter, which was 16% higher year on year. And of course, it's 20% higher in FY24. What you also want to keep in mind is that retail sales of the fourth quarter have gone up by 11%, including the Chinese joint venture, compared to a year ago. And in the full year, retail sales are up 22% for FY24. So looking very solid for Land Rover, Range Rover, that whole space, luxury, the car segment is looking good. So I guess if you ask a JLR owner, they would, of course, bet on the car, even though this is one car that spends more time in the garage than on the road,
so
but it's
JLR
still a great
owner,
buy.
Is it a dependable car?
We wouldn't know. That's what I said. You will have your car longer in the garage than at home. But nevertheless,
no. But the point
Samina
about
yeah,
I thought so. But the point about the JLR numbers, one, ahead of street estimates, ahead of most estimates, part
and
one,
including China,
and part two. I think there's a, unless I'm wrong, there's a Morgan Stanley note today which says that this whole return to non-EV cars actually is positive for some of the legacy car makers, including JLR, because apparently JLR's overall volume of EVs was about a measly 2%, never mind the best efforts. So this whole return to non-EVs is actually a positive, and is that what is showing in their Q4 updates, which are pretty similar to FY24. So won't be surprised if Tata Motors has a positive reaction to it.
Can I just do a very small segue, because you're talking about EVs, and this is something that I've been noticing, finding fascinating. The whole EV story could lose its fizzle.
Why?
I think Tushar will be excited to hear that.
Because practical problems are cropping up. I'll give you an example. The state government of Kerala has put out an order saying that please don't charge your EVs in the evening. It's too much load on the system. And the quantum and volumes are so few. All of these practical problems are going to come up as you grow in volumes, because kind of longevity, infrastructure is not an issue just India is facing right now. So this
could it be a 2024 issue though? Because we know that 2024 is a peak power deficit year for us. And power capacity, as it builds up 25, 26, could it be a return?
But world over, look at Tesla sales, for example. So the EV story and how much it will last is going to be on test this year, is what I think. But anyway, good for JLR and good for Tamanna.
Yeah, we're still old school. So JLR is looking great. EV may not be, like Tamanna said. Lots of practical problems is what the sector is dealing with. But you know what, Uno Minda, they've been investing big time in building that infrastructure for charging in India. So who knows, while it looks like a tough space, counters like those may actually gain on back of news flow like that.
Yesterday.
Well, another exit, Bain Capital, after making a very significant entry, remember, into Axis Bank over 6 years ago in 2017. They are finally marking a complete exit from Bain Capital. It's been over 6 years. Bain Capital will be making an exit and diluting their last 1% stake in the bank for consideration of about $430 million. Remember, it doesn't come in at a discount. It's a marginal discount to yesterday's closing price, and I think that's what I'm taking heart from. 1,076 rupees to 1,071. So 1,071 on the lower end of the price band is what that exit will be marked at. Remember, they have marked an exit in December and another time last year. So this is the last leg of Bain actually making an exit. Now, whether this gets snapped up by another private equity player, because that's pretty much been the game, or it gets picked up by investors is what I'd like to watch. But up until now, even for a Coforge, you had Bearings exiting. So I think the trend really is one private equity selling to another private equity.
There's enough appetite, I would think.
Yeah, but this seems very strong on two reasons, and
pricing
could be constructive for Axis, because one, clean out trade, and two, the pricing at which it is done. Wouldn't be surprised if Axis has a positive reaction to
it should, right? Because
yes,
all the ones that we've seen so far have come in at an average 2.5% to 5% discount. Maybe not in banking specifically, but even the likes of a Walkard got snapped up at a 5%. These guys have been brave and said that, we're going to keep the price almost at yesterday's close. Also, what supports them is the broader market sentiment, so it works out.
Especially for banks. Banks and financials are having a good time. Another, I would say, company that has been supported by broader market sentiment and has positive news flow today would be an SJVN. The whole government capex spend impact, convoluted sentence, but stocks that are, positively impacted by what a the future or the incoming government will spend, have been seeing a bump up, and SJVN is one of them. So they have a joint venture which they've announced with Assam Power Distribution. Their arm has signed this agreement which will develop renewable energy projects and parks. Now, this is a theme which recurs again and again in the markets right now. Anything to do with renewable energy is doing very decently. And look at that stock performance as well. In the last 5 days, up about 7.5%. YTD has been about 45%. So I would look at SJVN. I would look at IRB Infra. Their business updates are looking good. Toll collections for March 24 up 30%. Growth for assets under IRB Infra Trust is at 40%. So IRB Infra, just quickly go through one more. Before we go to your first three, Niraj, is Gland Pharma. And you were talking about stake sales. So this is another one. Their shareholders, Nicomac and RP Advisory, are going to sell about 4.9% stake. The discount, though, is a little steeper at 7% odd, with a floor price of 1,725. So you might see some price action movement in Gland Pharma as well.
Yep, watch out for Gland, and since we're talking of QIPs, the other two to watch out for could be Shilpa Medicare, where the board has authorized the opening of the QIP today. The floor price, this one, the floor price is 10% lower than the closing price, 477. So it's an equity dilution of 11% as well. So that's a large capital raise at a substantial discount. I hear chatter on the street that some very large and smart HNI money is interested in this one. Do watch out for Shilpa Medicare. Remember, it's a stock that's kind of flatter to deceive, but pharma is on a bit of an upswing. So the timing from a QIP, both Gland as well as Shilpa, is correct. Let's see if Shilpa reacts to the pricing and the size, and then we'll talk further. But yeah, speaking of QIPs, Shilpa is one and Sterlite Tech is the other one. The board has set a floor price at 119 rupees per share, which is about a 6.5% discount to Monday's closing. Motilal and Nuvama are the bankers here. Watch out for this one as well. A stock that's, you could argue, is kind of Lotus mojo after Anand Agarwal kind of quit the company, right? But like, it's kind of gone nowhere really over 3 to 5 years. I may be wrong, but I don't think it's done too much. But a QIP in the offing. Let's see if it gets some successful subscription or no. And I thought ICICI Lombard was interesting. The March GDPI was up 18% YOY, which was ahead of most street estimates. 18% in 2024 versus 17% in 2023. And this is interesting because most insurers are not, private insurers are not growing well and losing market share. Is everybody's loss ICICI Lombard's gain is the question. But again, because it's done reasonably well and better than peers, you might see a bit of a reaction for Lombard as well. So do watch out for this one. There's some others as well, but anything else that you guys have picked up?
Yeah, maybe just Omax. I thought Omax was interesting because they're going to be developing India's first integrated multi-sports stadium in Delhi's Dwarka. So it's a pretty big project, and they're doing it with the DDA. It's a public-private partnership, 1,500 crore project. So for Omax also to get into this seems interesting. The cost of construction is expected through internal accruals, and the revenue expectation is about 2,500 crores. And they have the contract is to build and maintain this club for 30 years. So maybe Omax is one that you'd want to look at as well. Cupid had pretty good updates. So did Sula. There's a whole host of them. Trill has a good note out from Nuvama. So a lot to, come in on. But,
sorry.
One quick one on Sula. I mean, I thought you'd pick it up. Or you would pick it up, but I guess I will, given your love for wine. But they've recorded a pretty decent reading. 10% growth in net revenue for the fourth quarter as well as FY24. Net revenues have come in at 132 crores versus 120 crores in the same period last year. Full year revenue, of course, at 600 plus versus 550 in the previous year. So could be a gap up. It's a smaller counter, active with traders, so you will see a good sort of move on back of those numbers.
I'm remembering our conversation with the Sula management.
And Andrew.
And Andrew, when we were telling him that it's all about gin, who's buying your wine? And he said, no, people are buying wine.
Yeah,
it's showing in the numbers, I suppose.
Wine tourism has had a really good, strong growth. I think 16% YOY growth for wine tourism business for Sula, which is the really interesting piece, I thought. So
they did have some investor as well come in, right? From what I last remember. Was there a significant stake? No?
Not completely sure. Okay. But did well out there. Couple of buybacks. So Anand Rathi Wealth and Sharda Motors, both board meets to consider buyback of shares. I don't know if the stocks react to that. And Anand Rathi is interesting because Anand Rathi is, by any stretch of imagination, compared to any other company in the same space, very expensive. And they are considering a buyback. That's, I thought, was pretty interesting. So watch out for both of these. And Tamanna was speaking about brokerage notes. So 2 or 3. One, the Jefferies has notes on 361 and Nuvama Wealth, like I said. So 361 WAM has been rated a new buy at Jefferies. The target price is 900 rupees, which is a 25% upside. And in Nuvama's case, Nuvama Wealth rated new buy at Jefferies. The target price is 6,000, which is a 19% upside. So watch out for both of these, including PVR Inox. And guys, last stock on my radar is Exide. While it was a star of yesterday's session, JP Morgan has upped the target price, I think, to, if I'm not wrong, a significantly higher number, 4,300 or thereabouts, if I'm not wrong. So that is 480 from 330, excuse me. So that's one. And I saw another note from either Morgan Stanley or Jefferies as well, which is, or HSBC, which has said that this is a re-rating move, re-rating event for Exide, and their target price is also 16%
I'm wondering, because the trigger is interesting. The trigger is actually a government policy move that you have to localize your production of EV batteries if you want to sell in India. And I'm wondering if an Amaraja and other players would also down the line benefit. But Exide, of course, has a big catch with the Hyundai Kia Pace right now.
Yeah, so the 2 brokerage notes out there, and we'll bring them a bit later on in the show, but watch out for these as well. Okay, so that's the long and short on the trade setup and the stocks that we are looking out for, but we are also looking out for a bucket of stocks, and which is what I believe, Alex, you will be talking about on Editor's Cut, or did I get it wrong?
No, you're absolutely right. In fact, there's one index that is outperforming everybody else by leaps and bounds. And you probably won't guess if you've not looked at the screen recently. It is, in fact, the PSU Banking Pack, which is up as much as 27% in the year-to-date 2024 alone. And the Nifty Bank in that same period is flat, almost completely unchanged. So the big question that we're asking is, what's going on? Has there already been a valuation re-rating? And what's the potential going forward? Harsh has some of those answers. Harsh, the first question I think everyone's asking, what's going on?
Well, a couple of factors playing out within the entire banking space, Alex. One is there is clearly a deposit growth war. The reason for that is typically deposits allow room for lending growth. Where the PSU pack is concerned, or the PSU banking pack is concerned, in any case, your loan to deposit ratios at the start of this deposit war or cycle was anyway very, very reasonable. It was roughly 60-65%.
And that's healthy.
And that's not healthy per se, but it puts you at an advantage when a deposit growth war comes. And therefore, when the deposit growth now, when everyone's chasing deposits, PSU banks don't have to essentially do that. And that's one of the possible primary causes of this re-rating that has happened outside of asset quality and fundamental factors, which in any case are improving across the board.
You're talking about the credit deposit ratio being one of the primary aspects to focus in on. This is coming at a time when it is at the highest level for the industry than it ever has been. And that's primarily because of HDFC Bank. Is that right?
It's not primarily because of HDFC Bank. It's just given the system liquidity compression that has happened, which is causing this kind of mismatch between loans and deposits. In any case, the RBI has highlighted at various points that they want, or they're guiding banks to increase and to expand loan to deposit, so that you have a larger deposit base to essentially ensure lending. So,
okay, And PSU banks have been more successful in garnering these deposits. Is that it?
Yes, PSU banks have not been successful in garnering. They've started off on a better footing. Loan growth is not something that they have done for a very long time, and hence deposits kept coming in.
Right.
And therefore, your loan to deposit ratio was essentially very favorable at the start of this cycle, which has essentially continued to improve through the course of the cycle. And what's therefore happened is you're sitting with loan to deposit ratios of roughly 75 to 80% within the PSU banking basket. And within the larger private banking basket, when I'm looking at it, you're roughly in your late 80s to 100% plus.
Right.
And that causes concern because you essentially can't grow loans if you aren't able to garner those many deposits. But the private banking side has repaired that in Q4. Very, very strong set, 5% plus sequential across banks, except probably a South Indian bank, which hasn't done too well. Outside of that, I believe most banks have done very, very well to improve that credit.
Would it also
ratio.
be a factor of the type of deposits that they're getting and the cost of deposits for PSU banks vis-a-vis the private sector banks? Because some of these private sector banks that have amped up their deposit growth in the quarter gone by have gone the wholesale route. So is that something the street is also focused on?
So, Alex, yes, for sure they are focused on. But when you're looking at the PSU bank versus private bank kind of play, the PSU banks currently are in a situation where they can stand back and say, we're fine in terms of deposit growth or letting go of deposit growth. We can only focus on loan growth because the LDRs are so compressed. And on the other hand, you have, on the other side of the spectrum, you have private banks where they believe that any kind of deposit that they get is a positive because it helps them lend.
And they possibly have to slow down loan growth.
Correct.
So therefore, there's a potential for public sector banks to garner that share of the pie.
Correct.
Okay, so that's the way to look at it.
Yes.
Potential for.
Yes, but nonetheless, the public sector banks haven't grown their loan base in a very material manner or significantly higher. Private sector banks' growth continues to outstrip public sector banks, if that's how I can put it. Even now, in terms of the numbers that have come in for Q4.
So then, what are we talking about? Are we talking about the potential resulting in a requirement for a valuation reset or a valuation re-rating? What do the multiples look like right now?
So, valuation re-rating definitely playing out. And that's not just because of the observations with regard to loan to deposit. It's also with regard to a couple of more factors. One, they have very, very small, or they have a very, very small mix of unsecured, where there is a possible asset quality problem which the RBI has flagged. Second, you're looking at all-time low NPA ratios, and therefore the valuation mismatch between, or rather the valuation difference between private and public sector banks has compressed materially. And third is that you have limited margin contraction.
Why is that?
Given the fact that you aren't chasing deposits in a big way, and therefore you haven't needed to hike deposit rates in a big fashion.
What we talked about wholesale deposits as well.
Correct.
Yeah.
So they haven't needed to hike that, and therefore the margin contraction has been limited. It has been there in Q3. We've seen that in Q3. So please don't get this wrong. But it's been limited in comparison to the private sector peers.
Okay.
And therefore, you are seeing a lot of this play out on valuations. Compared to their 5-year averages, valuations are expensive within the PSU banking basket. But over the last 5 years, mind you, we've seen a deep cycle when it comes to the PSU banks. They've gone through a bad cycle. They've come back from it. And therefore, a little bit of valuation re-rating is necessary because that's just
I
how
see you point out
efficiency
SBI at 1.7 times price to book value, PNB and BOB at 1.4 and 1.2 respectively. That's not very high, is it? I mean, but traditionally SBI has gone to as low as 1 times, right?
Even below 1 times,
Right.
Alex. SBI was at one point trading at 150 rupees, COVID low, maybe 170 to 200 for a very, very long stretch of time, which is 0.5, 0.6 times price to book for it at that point of time. And therefore, it was trading at an extremely reasonable
So now
valuation.
it's a little expensive.
Now it's gone up, of course. You've seen it go 3x plus the book value consolidate even further, and therefore it's trading at roughly 1.7 times. But you look at some of the others, Bob, PNB, CanBank, in comparison to the private sector peers, they are still 25 to 30% cheaper. And this is just the big four. I'm not talking about some of the smaller banks where valuations have significantly started to stretch.
Sure.
We've seen valuations currently within the smaller PSU banking basket almost 2.5 to 3 times.
Right.
IOB is trading at roughly 4.5 times price to book.
Okay.
So somewhere that pocket needs some bit of caution given just in terms of relative valuations versus private banks and versus their own 5-year averages.
Okay, so I think we've covered the basis as to why you've seen a bit of a jump in these prices. The question is whether that sustains, and as Harsh just pointed out, in some of the smaller banks, perhaps the valuations are looking a little bit stretched. But let us know what you think about whether or not you would buy these public sector banks at these levels. And we're slipping into a very quick break, but on the other side, we've got F&O cues for you to watch out for, so do stay tuned.
Welcome back. You're watching India Market Open. A quick check on GIFT Nifty. Implied Nifty expected, or rather indicating to a gap up start and trade this morning. Remember, Asian cues are positive. Technically as well, the setup looks pretty good. But remember, you've got to be exercising caution at this stage and also working with trailing profit levels. But Agam is standing by with all the F&O activity. Agam, it came out of nowhere, may I say that, but we did snap out of a long phase of consolidation yesterday. Quantitatively, the number gain was not too much, but it was a new record high, and that's what we're all getting very excited about.
That's pretty spot on, Samina, because we did in fact see a lot of consolidation near life highs for the Nifty, and now we're starting to see the Nifty once again edge higher and higher. At the moment, the plus sign is at the moment we could likely see the Nifty open at even higher levels from yesterday, considering we closed at life highs. And well, the Nifty now sustaining about the mark of 22,600 and closing about that comfortably is of course something that a lot of traders are going to take with two hands, because the open interest is also increased by as much as 8% towards what it looks like as fresh longs at the moment. The Bank Nifty, on the other hand, did see unwinding as far as the futures go, to the tune of nearly 4%, but that one also made a new life high before retracing its steps just by a tad bit. But should we see strength today? You never know. You could in fact see the Bank Nifty once again make a new life high going in. Now, as far as the option market is concerned, on expected lines, considering we saw the Nifty move higher, we saw a lot of writing around puts, specifically in strikes around 22,500 and 22,600. And in terms of your overall open interest, your maximum open interest now stays at around 22,500 on the lower end, where we are looking at a little bit of strengthening of support there. And on the higher end, keeping an eye on 23,000 call, where we have continued to see writing coming through. Of course, it is also the Fin Nifty options expiry today, so keeping an eye around levels of 21,600 and 21,700. The premiums on the Fin Nifty tend to be shrunk by the time we reach the expiry, so that is something that a lot of writers should be wary of. That said, when it comes to stocks, we did see longs building up in LIC Housing, Info Edge, as well as Lotus Labs. We saw some amount of declines in Oberoi Realty and REC, but in terms of stocks which saw unwinding, we saw Godrej Properties as well as Aisha looking at about a short covering. The question really is that, considering the markets are very poised very interestingly at life highs, what do we do with these levels? Well, let's get in Amit Goel of Amit Ventures, who's joining us on the show right now. Amit, good morning. Thanks for joining in. Firstly, your view on the Nifty and the Bank Nifty, and if there are any option structures that you are deploying on these indices.
Yeah, good morning, Agam. Good morning, Samina. Wish all of your viewers and the team at NDTV Profit a very happy Gudi Padwa. Coming to Nifty and the Bank Nifty, the way I've been maintaining my stance on Nifty has been it's a buy on dip market, and we have been trading with an upward bias. Last time we met, I was of the opinion that we should be printing a new lifetime high, and 23,000 level is but an eventuality. It's not an if, but when it will happen. So I maintain my stance of that, but with every increase and every new lifetime high, it comes with a little bit of caution that we need to protect our profits. So the view on Nifty continues to remain bullish, and I would like to, probably look at accumulate at the levels of the current levels, and look for a potential breakout of close to 23,000. The stop for this view would be about 22,300 on the downside. This is a swing view, but the immediate support as per the option chain for this week happens to be 22,500. And a short-term trader could look at selling the 22,500 puts. And anybody who is a little conservative could probably convert it into a bull put spread by buying an offset. So the view continues to remain bullish on Nifty.
All right, so the bullish view on the Nifty and naturally on life highs. A quick view on the Bank Nifty as well, Amit?
Yeah, sure. Bank Nifty has been a mixed bag. Nifty would have probably touched 23,000 long back had Bank Nifty been along with it. But Bank Nifty has been a little weaker of that, and the chart structure has become a little complex and murky to read. But the way I see it is, it has given a breakout from a complex picture of cup and handle, which is a continuation and a bullish breakout chart pattern construction. So I would look to go long at a retest. The retest levels would be close to 48,000 for eventual swing targets of 49 or 50,000. But speaking about immediate expiries, which is in the next couple of days or probably for the next week, on account of mixed signals with the chart pattern giving a doji and a future unwinding, I would probably look at setting up a non-directional setup here, where I would look to sell the 48,500 straddle, both the call and put, for either this week or next week, and keeping 48,000 on the downside as my stop loss, a technical stop loss, or the 49,000 on the upside. Conservative traders could probably look at buying wings for 48,000 and 49,000 to convert this into a limited risk strategy called as a iron butterfly.
Okay, this is very interesting. So what Amit is suggesting is that if you want to go long, don't go long at these levels. Wait for it to, well, come back to levels of around 48,000. And otherwise, if you look at it from a 1 week point of view, well, Amit is suggesting a delta neutral or a direction neutral strategy where he's looking to sell a straddle. And of course, in case if you don't want to take a risk, you go ahead and buy wings. That said, Amit, let's talk about stocks then. And I believe you have the heaviest of the weights, Reliance Industries, where you have an option structure here.
Yeah, I mean, as a disclaimer, I mean, a lot of option traders, newbies, retailers specifically, like to trade momentum stocks, and from the options angle also. But it is a little risky. Options itself is a very complex product. So I generally tend to give views on highly liquid optionable stocks, the Reliance and HDFCs of the world. So maintaining my stance on that, I have a fairly bullish view on Reliance. Reliance has been consolidating for some time and has given a clean breakout from 2,600 levels in the January month of this year. After that, creating a new lifetime high, Reliance has been into a consolidation phase, which looks to me like an ascending triangle, which again, from a chart pattern, being a technical analyst, from a chart pattern point of view, it is a continuation pattern, and the previous trend being uptrend, I would consider that we are going to continue into Reliance uptrend pattern. So the two ways I could look at trading this is from a cash angle. I would look to accumulate and around 2,900 to 3,000 levels, keeping 2,900 as a technical stop loss for eventual targets of 3,100 and 3,250. But if somebody wants to play this from an options perspective, I would look to enter into a slightly advanced strategy, which is known as a call ratio spread, call ratio front spread, so to speak, wherein I would look to buy the 3,100 call of this expiry and sell 2 lots of 3,200 call. This gives me a ratio spread, which is protecting me on the downside. If at all the market continues to remain sideways or goes down, I get protected with hardly any loss on the downside. And if it moves up, eventually by this expiry, we could look at a target of about 4,000 odd levels of profit. We will keep a rupee stop loss here of about 3,000 rupees, and as I said, my target would be 4,000 rupees, and I would trail this target, at 3,500 and increments of 500 rupees for potentially higher rupee targets. The only glitch or the only cog in the wheel in this entire setup is the towering 3,000 call open interest. Okay, that is massively high. So this would work on both ways. Okay, if this continues to remain high, it would probably face as a resistance, wherein we do not make any major losses. But if it gives way, we could probably see a short covering rally. So I'm essentially bullish on Reliance with this structure.
Right, fair enough. And a valid point as far as the 3,000 mark is concerned, because it's also that round figure, many may consider it as a psychological zone as well. That said, finally coming down to L&T, Amit, can you take us through that option structure as well?
Yeah, L&T has been in a secular bull run since June 2023. It's been a darling of the markets. We have seen L&T go from 2,200 levels or to around 3,800 levels. Of late, from a technical standpoint, it has given a breakout at around 3,700 levels, and currently it is confirming a retest of this level. So from a technical standpoint, I would like to go long, and the structure that I would like to play this is, from an options point of view, it would be a bull put spread, wherein I would like to sell the 3,800 put one lot and offset this with the protection by buying the 3,760 put one lot. Again, here I would like to keep a rupee stop loss of about 2,500, 3,000 levels, and I would aim for a minimum target of 4,000 rupees. And then I would like to trail this at every 500 rupee increments. This is a fairly liquid counter, so retailer could probably look at getting into it comfortably.
Okay, Amit, we'll leave it at that. A fairly comprehensive view and two big calls on Reliance Industries as well as Larsen & Toubro that we can keep an eye on, and some very well-explained strategies as well. Amit, thank you so much for joining us and taking us through your views in the markets. And with that, it's over to you, Tamanna.
Thank you for that, Agam. Now, the focus today is that are we going to now move to the next step? We have seen the Nifty hovering around a little below, of course, the 22,700 mark. Are we ready for the next phase of breakout? What are the stocks and sectors to focus on? Remember, it is a truncated week as well. Your implied open is showing a pretty decent start. 87 points up. Rajat Bose with us today. He's a SEBI-registered research analyst. Aditya Shah is with us today, founder of Hercules Advisor. Welcome to both of you. Great to have you on NDTV Profit this morning. Mr. Bose, morning. Let me begin with your take on, let's start with the Nifty, Bank Nifty levels and where you see this going. And is the momentum still there?
Well, the momentum is a bit flagging in case of Nifty. I would say that Nifty yesterday, I expected it to at least climb up to 22,734, but it fell short of 22,700. 22,734 in my reckoning is a very critical Fibonacci projected resistance level. At least it needs to be crossed if the Nifty were to move above, say, 23,000. But till such time it falls below, say, 22,300 and 22,200, this is a major support area. This would be a minor course correction that may happen. Regarding the Bank Nifty, I would say that 49,000 might be tested, or it may seek a retreat to something like 48,000 once again, and maybe 47,775. And after that, there could be another rally, which would take it to 49,000. For the Nifty, I have been maintaining a target of 24,100 by June. And that is a major resistance level, resistance zone from where I expect a serious long-term correction. I mean, at least a medium-term correction might happen. As of now, at lower levels, you would see more buying coming in. Sporadically, buying will continue in certain pockets, and there will be profit taking in another pockets, but not much weakness as such. But coming 10 days, 10 to 15 calendar days, you might see some kind of range bound.
Specifically in terms of your picks, Mr. Bose, let's get those up front for our viewers this morning.
Well, I would say that I have chosen two stocks. One is GAIL. GAIL yesterday did quite well, and there is every possibility that GAIL might scale up to initially 205, and after that 209 and 215 are the two targets on beyond 205. And I would suggest a stop loss of 193. That way, it is a 1:2 kind of risk-reward ratio, and it is pretty good. And the other stock is Mazgaon, Mazdoc. The code is Mazdoc. It's Mazgaon Doc. There, I would put a stop loss at 2173. It's a buy call, and 2425 and 2474. Pretty steep targets I have given for the simple reason. Mazgaon Doc in its chart is showing a flag formation after a good run. It showed a flag formation for the last 3 trading sessions, and it is about to take off once again. So that's why these 2 calls. Of course, there are lots of other stocks that are pretty good, but I have chosen these 2 because I see higher probability of their going up.
So I have with us Aditya Shah for a technical view on the markets. Aditya, do you feel like there is a breakout that's underway? The quantum of gains was not too much in yesterday's day of trade, and it's taken a while to make new life highs in terms of the Nifty. But from here on, bullish trade on the index, and also if you've got a view on Bank Nifty, that'd be useful.
Hi, good morning. I will correct you there that I am a fundamental analyst and not a technical analyst. But fundamentally, if I were to give a view, fundamentally, we are on a very strong wicket. India over the next 5, 7, 10 years is going to do extremely well. Here on, over the next 1 or 2 months, I think that the market is going to take a breather. The next move of the market will only come when it is reinforced that the elections are going the market's way and the ruling incumbent party comes back. And after that, during the budget season, after the elections, the government is going to make some strong moves, be it related to the middle class budget, be it related to spending on the infrastructure side of it, be it relating to the manufacturing boost that the government is trying to give up. So in my view, over the next 1 or 2 months, we will be very range bound. We will be trading in near about these levels. Waiting for the elections to get over, waiting for the election results to come in, and thereby afterwards, when the government starts to make a move, then we will see some strong up moves coming in the market.
Aditya, good morning. Rajat made an interesting observation about one of the stocks, which is GAIL. Yesterday, the stock was up and active, primarily because of this Morgan Stanley note, which said there is a chance that EBITDA could double by FY27, and their belief is that the stock could also double by that much. Now, and of course, the thesis that the global gas glut is coming at the same time that India is expanding the base, so on and so forth. Maybe you got a chance to read that note as well. I'm just trying to understand fundamentally, how does a large gas company like GAIL look from an investment perspective?
I've always been positive on GAIL. GAIL has always been trading below its intrinsic value due to a whole host of reasons, primarily being that the government is not able to monetize the company properly. First point. Second point is the stock is performing really well over the last 1.5 months. In my opinion, if you want to play the whole of gas theme, there are city gas distributors who are much better downstream plays like IGL and MGL. GAIL overall has its own problems that the distribution business and the gas producing businesses have not been separated out. And that's where the problem really is. It's a great company trading at a very cheap valuation. However, the government needs to monetize it by separating the gas distribution business and the gas producing business, which will happen over a period of time. So a good company, you should always keep it on radar. And on any correction, there's an opportunity to add on this company.
Very quickly, another space that's been looking pretty good fundamentally and technically has been some of these non-lending names. So IIFL Finance, Anand Rathi, Nuvama, all these counters have been doing quite well over the last 3 days. Technically looking solid, or do you think there is a little bit of a fundamental underplay as well here?
Is it for me?
Yes, it is, Rajat.
Yeah, you said IIFL Finance.
IIFL Finance, Nuvama, Anand Rathi, all those counters are looking really good over the last few days of trade.
See, these 3 stocks, these stocks are actually doing pretty well. And chances are that you will see further upswing, but I'm unable to give you levels at the moment because I haven't studied them in thorough detail. But a few percentage points run up from here still possible. But only thing is that the overall market sentiment will also be playing out here, because that way their moves could be a bit restricted.
All right, more stocks to watch this morning. Mahima is joining us and we've spoken right now about GAIL. There's an MS note out on RIL. Will that move? But a clutch of other mid-cap and smaller cap companies also which could see movement. Mahima has that list.
Hi, Tamanna. So I'll start with PCBL first. Well, PCBL, the company's arm, has commissioned a 12 megawatt project plant in Tamil Nadu. The total power generation capacity now stands at around 122 megawatt. The next stock is HG Infra, where the company has incorporated a wholly owned subsidiary, HG Chennai Tirupati Highway SPV. The incorporated subsidiary is to undertake a 862 crore project, and the project is awarded by NHAI, and it will be in the hybrid annuity mode. Now, the Cupid business update numbers came in, and the revenue is up by 51%, EBITDA is up by 205%, and margins are up 51% versus that of 25% year on year, and the PAT is also up around 185%. So good set of numbers for Cupid. Now, what has led to this margin expansion? Where cost of materials were down around 1.4% and other expenses were down around 45.5%. So these are the three key stocks to watch out for in trade today.
So those are some key stocks to watch out for in the session today. Well, from amongst all the newsmakers, you have to argue that Axis Bank is an important one to watch out for too. Aditya, a clean out trade, and I'll ask this to Rajat as well, but Aditya, first to you, a clean out trade not priced at a discount, if it gets absorbed well, you reckon there could be upsides here for Axis?
Niraj, I am positive on the large private sector banks. We've seen that over the last 6 to 12 months, the PSU banks and the small private sector banks have done really well. Stock price wise, whereas the large private sector banks have not gone anywhere. We've seen a good improvement from HDFC Bank on their deposit number, and I expect ICICI Bank, Axis Bank, Kotak Bank, and SBI to all report very good set of numbers. So in my perspective, this trade will get absorbed, and there is good demand for large private sector banks in this market. It is as good as a contra trade to invest in large private sector banks at this stage. So I'm positive on all large private sector banks, including Axis Bank.
Good morning. Good talking to you. Very quickly, we need to slip into a break, but just a quick thought on Axis if you can. Rajat, the question is for you. A quick thought on Axis if you can.
You see, Axis Bank needs to take out 1,084 to about 1,100. This is the supply zone for Axis. If it manages to do that, then you can expect 1,120 to about 1,125 on the upside. But this range between 1,084 to about 1,100, it would pose a lot of challenge for Axis bulls.
Thanks, Rajat. We'll do details in just a bit. We'll need to slip into a quick break. The implied open suggests a positive start. Brace for one. It's nice to have a green on the screen. We'll be right back in just moments from now.
All right, welcome back. We're just about 2 odd minutes away from pre-open rates, and it's looking like we're going to have a good day on the markets. I want to come quickly to Rajat Bose and just get his take on RIL. RIL moved well yesterday. The Morgan Stanley note is out as well, and is saying that we could see some re-rating in its verticals, not quite the telecom one, but some of the other businesses. The target price they've set is about a 3% upside to market to the current market price. How do you look at RIL, Mr. Rajat Bose?
Call me Rajat, that would be better.
Okay.
I would say that 2971, after about 6 trading sessions, that was consolidation. Yesterday, we saw this is roughly, it can be called a bullish belt hold in candlestick parlance. This is a bullish pattern, the name itself implies. Now, the earlier high around, say, 3011, if I'm not mistaken, this is the high. And it is likely to be retested very soon. And it can even go further up because there are signs that Reliance might actually move up something like 3050 to about 3100. That is also a possibility.
Right. We've got a minute to go as we gear up for pre-open trade. It's going to be a positive one. Remember, global cues are looking good. Yesterday as well, the markets closed a record high. Some follow-up buying cannot be ruled out in today's trade. Aditya, you want to come in on defense stocks? The whole pack is looking really good over the last few weeks of trade now. Mazagon Docks, which was also Rajat's pick, Cochin Shipyard, HAL. I think barring BDL, the whole defense pack has been seeing some traction. Between now and up till the election, is this a good election play, you think? And if yes, your top picks in the defense pack?
See, as I said, defense sector is a multi-year play now. Indigenization of defense sector is one of the biggest plays over the next 5 to 10 years. And we've seen the government really working really hard on indigenization of the defense sector. However, in the near term, the valuations continue to remain really very aggressive on all the defense stocks, be it Mazagon Dock, be it Cochin Shipyard. So I will need to see some corrections before you play any of these stocks. Also, one thing that you have to keep in mind is now, right up till the elections, no new order inflow will come in for all of these defense companies as the model code of conduct continues to come in. So in my perspective, right now, very cautious on the defense stock. Number one pick would be Cochin Shipyard or a Mazagon Dock. From there on, you have to take, but in my view, expensive stocks, really very expensive place, expensive sector per se. What is the consensus buy generally tends to die down over the couple of years moving forward. So in my opinion, be really very careful. Try to add on corrections, and if you have these stocks, try to also book profits on some of these counters.
We've hit 22,700 in the pre-open session. We'll wait for it to settle, but looking like a solid start as of now. And look at Axis. First few seconds of trade, but Axis looking pretty good, up about 2.5%. Banking pack really, ICICI, Wipro recovering sharply after yesterday's CEO exit news. Again, we'll have to wait for those to settle. Aditya, I wanted your take on a Dixon. So interesting news from Dixon this morning. They're going to be acquiring a company called Ismartu, which makes a manufacturing assembly sale of mobile phones, but Ismartu's turnover is about 6,000 crores and Dixon gets about 51% stake. Let's pull up and see if Dixon is showing a positive move pre-open as well. How do you look at Dixon right now, Aditya?
Again, it is a manufacturing play, and the PLI scheme and government's push on manufacturing is benefiting Dixon. So in my view, longer term, really very positive on the stock. However, given the wafer thin margins that the company really trades at, the stock is really, really very expensive. One of the key themes in the market is the hot themes such as manufacturing, defense, renewable energy. All of these themes are really very expensive. So you need to wait for some correction to try to make a position in any of these stocks.
Dixon doing well this morning, as is Godrej Properties. Godrej Property updates were also pretty good, and just want to quickly pull that up. Just quick word from Rajat Bose on any of the property pack. Rajat, do you like some of these names?
last Tuesday, I gave a call on Godrej Properties, and I expected it to post a new high. Godrej Properties looks pretty good. In fact, that's the best of the lot at the moment. And apart from that, chances are that you will see DLF also doing pretty well. Generally, property stocks move at the end of a major move, and this is no-brainer that these stocks are now moving up.
Rajat, you want to come on Bandhan Bank, a 6% downtick yesterday. Do you think there's a shorting opportunity this morning on the counter, or maybe a pullback if you wanted to do a long trade?
See, Bandhan is one particular counter among the banks that is very weak. Although in the recent past there had been a bit of a corrective upswing, but once it tests that 50-day moving average, we saw that selling resurfaced, and it has started coming down again. So chances are that it will retest the earlier lows. I would say that if anybody is looking for investments or even short-term trading, this is not the stock to be in.
Look at Sula this morning. Sula this morning with good updates, actually. That stock about 4.5%. And as Niraj was mentioning, wine tourism seems to have fired for them in Q4, 31% up. Their own brands up 9%. Either way, Sula is having quite a merry morning, I must say. But a few others. I just want to pull up Strides as well. Strides has got some positive news coming in. They've got a US FDA approval for an antidepressant drug, which complements their current outlay as well. That's up about 1%. Gland Pharma was seeing a stake sale news, and as expected, that stock down about 3.5% this morning as well. Aditya, the conversation on pharma seems to be getting more interesting, seen largely only as a defensive play. But do you think that there are some legs to this rally, and anything that you would pick here right now in the pharma counters?
So I think that several API companies are going to do extremely well in 24 and 25. A lot of the capexes that they have put in will start to come online in 24 and 25. By the end of 24 and early part of 25, companies like Laurus, companies like DVs, which have invested very aggressively. To give you a example, Laurus has invested about 2,000 to 3,000 crores of capex over the last 3 to 4 years, which is all going to bear fruits by the end of 24 and early 25. So in my opinion, you have to look at the API pack, the active pharmaceutical ingredient pack, or if you are looking on the domestic side of it, then you have to look at some diagnostic companies such as Krishna Diagnostics, who is a B2G player and who is going to do extremely well over the next 2 to 3 years. Pharma is one sector that I am really happy, I am really very bullish on, with a perspective of about 2 to 3 years.
Right, so a whole bunch of those names are going to be in focus this morning. While Laurus had a good day this morning, it could be a morning when stocks like Gland Pharma may also see a little bit of an up move in trade. At least that's what, actually it's a down move on back of that stake. So 4% lower, but the counter was up 6% in trade yesterday. So some profits off the table. Now, whether that's an opportunity to go in is what we will discuss with Rajat and Aditya in a minute. But as always, at just after pre-open, we bring you what the brokerages have to say and what their top recommendations are. Harsh, as always, is standing by with more on that. Harsh, what do you have in terms of brokerage reports?
Well, yes, two very interesting ones. First off, with regard to transformers and rectifiers, they declared their numbers yesterday. They also had an analyst call. We had Nuvama come out with a note, continues to maintain a buy on this one, 575 being the target price. It's been a multi-bagger over the last 12 months, but a 20% upside even from here is what Nuvama sees. In terms of valuations, it's already trading at 100 times plus in terms of trailing 12-month earnings, but very strong growth going forward, and I'll try and reiterate what Nuvama is saying. First off, on the numbers, 3.5 times on PAT is what they've done in Q4 FY24 versus Q4 FY23, so very strong set again. Only just about 20% with regard to the top line, 18% to be absolutely precise, and they've doubled up on the EBITDA number. Margins have gone up by roughly 6% in absolute terms. It's come in at roughly 13.8%, just a tad shy of the 14% mark. What they're guiding for going forward, 2,000 crore in terms of revenue in FY25 is what they're guiding for. They've done FY24 at roughly 1,300 odd crore, so 50% growth there. In fact, Nuvama is building in another 40% growth in 2026 and another 30% odd growth in 2027. They are expecting revenue to go from 1,300 crore currently to 3,500 crore in FY27. That's the kind of growth they're looking at. Where will orders come from? They believe that the renewable energy space is something where there is limited number of competitors to what transformers and rectifiers does, and therefore there are moats that TRIL has, and therefore they believe that that will drive growth. And given that Power Grid is investing heavily in their capex, or their capex is going to come on stream coming in FY25 and beyond, therefore they are seeing that largest opportunity. They valued it at 25 times FY27 EPS discounted to FY26, so they've kept the EPS at roughly 26 rupees per share for FY27. The other one is City on PI Industries. Again, a very interesting note. Buy on PI Industries, target price 4,500, upside of roughly 13%. They've opened a 90-day positive catalyst watch on this one. They're expecting PI to report a 15% revenue growth, where peers are going to flatline in terms of the numbers. Something like an SRF, they are expecting to be absolutely flat, and they are expecting a slightly decent guidance with regard to FY25 as well, something around the mid-teens, and that they believe will be the catalyst for this one.
Okay, Harsh, thanks for that. It's interesting to bring out a positive catalyst watch on some of the chemical names and agrochemical names, because this has now been happening for the last few days, that we're seeing some bit of a turn in the fortunes, possible turn in fortunes for some of these. Okay, as the pre-open rates have settled, Gland is down 4.5%. So that's the first QIP victim. Wonder is Sterlite Tech, as well as Shilpa Medicare have reacted to those discounts as well. Sterlite Tech not so much. Shilpa Medicare should come up on your screen. Actually flattish despite the 10% discount on the floor price for the QIP. So that's interesting. And Axis Bank, of course, is up 1.3%. No surprise there as well. Otherwise, we're not seeing too many large reactions here. Now, Rajat, coming on these pharmaceutical names, Wockhardt, QIP done. In the similar space, now we're seeing Shilpa doing a QIP as well. So Rajat Bose, the question is for you. Do you sense some optimism in the charts of the positioning for the Wockhardt, Shilpa Medicares, or some of the others?
Well, to talk about Wockhardt, I would say definitely there is a possibility that you will see some traction coming back to Wockhardt. Wockhardt has been on a medium-term uptrend, and once it crosses, say, 580, 600 zone, then you will see a lot of gumption might be seen. But only thing that I am slightly concerned about is that you said QIP done. These QIPs, IPOs are somewhat problematic things, because the stocks don't tend to move much further after these things are already through. So that's the caveat for any kind of big move expectations.
You're actually seeing that. So maybe not in all, but yeah, the point is well noted. Aditya, from amongst stocks that have recently done well, and we spoke about the capital market plays and the pharma plays for sure, but metals consistently picking up some steam fundamentally. Shyam Metallics numbers yesterday seemed to be pretty strong too. Anything that stands out here?
So on metals, Niraj, what is going to happen is now we are at the top of the interest rate cycle. And as the interest rate cycle continues to move down, and over the later part of this year, the Fed will start to cut interest rates. So from that perspective, the demand for metals should start to come back as the interest rate cycle continues to top out. And we see that interest rates get cut. Now, from a stock perspective, what do I really like here? The likes of steel companies like Tata Steel is something that I would really want to watch out for, or companies like SAIL. So pure play ferrous metals is something that I'm really concentrating on at this stage.
Right, those are a few names to track. Anand Rathi could be the biggest gainer across the broader markets in trade once we open up in a few minutes, and that's largely on back of that buyback. Aditya, you track Anand Rathi closely. I know we've discussed this, but very quickly, how does this look fundamentally to you?
Unfortunately, I don't track this stock very closely, so would not be able to comment on this.
Yeah, but 6.5% uptick is what we are expecting as the stock will open up for trade today. In fact, that's the game, that's the play this morning. Nuvama, 369 and Rathi are expected to be your top 3 out of the top 10 gainers in today's trade across the broader markets. Dixon also not doing too badly. Tata Investment Corp, after a circuit yesterday, low circuit, is expected to see a gap up this morning. 2% higher is what we're expecting. Largely speaking, the market momentum will look good from what we see. But Rajat, if you want to come in on this one, we are looking good in terms of opening trade this morning. But do you feel like intraday there could be some profit being taken off the table in the second half is when we might see some weakness emerging?
Yeah, actually, I'm prognosticating that because generally the pattern that I've seen on the Nifty as well as the Bank Nifty, they seem to suggest that at least one bit of small consolidation move might happen. When we say consolidation, it's a kind of an euphemism for a short-term correction, and that is quite likely. So I'm slightly wary of going gung-ho for long positions at this juncture. Because in my view, maybe we have seen a top or we will see a top today.
We'll see a top today. That's Rajat Bo's belief. Well, watch out for that. And we've had a very steady rally in the recent past, so no reason for the markets to not take a bit of a breather. You could well anticipate that. But the pre-open rate suggests some upsides. Let's wait and watch what within that universe or what within that landscape does well. So that is the first thing. 9 seconds left for the markets to kickstart trade. Remember, some of the block deals already digested. Axis Bank, for example, so could start off okay. The question is whether Reliance gives that supporting hand that it did yesterday. But here are the first trades. Well, more or less on expected lines, 22,750 or thereabouts. Resistances at around 22,800 or thereabouts. Bring up the Bank Nifty, flattish. So clearly banks aren't participating much like yesterday. Mid caps 0.5% higher. Small caps, which had a steady move at the start yesterday, are also starting off higher. But remember, small caps and mid caps cooled off in the session yesterday. The market breadth wasn't positive in trade. Let's get the heat map up on the screen and see what's moving. A lot of green, very little red. NTPC, yesterday's key performer, is starting off slightly lower. Divi's is flattish, but otherwise a lot of green. But normal green. So Tata Motors on expected lines, good data, good numbers, a good JLR update, 1.2% higher, though nothing too much. Infosys on that BOFA upgrade is up about 1%. There is strength in BPCL, up about 0.75%. Autos seems to be picking up from where it left yesterday because it's not just Tata Motors. Maruti is in the green, Hero is in the green. I also saw Bajaj Auto and iShare marginally in the green. So that's the long and short of the trade today. NTPC, for whatever it's worth, is the top loser, but again, less than 1%. But it's autos in particular, autos in general, and Tata Motors and Infi in particular, which from a news perspective stand out. I don't quite know why Shriyam Finance, 2 days on a trot, is doing okay. But yeah, Tata Motors and Infi kind of stand out for me, Tamanna.
The autos are completely zooming. I'm excited that we're sustaining quite decently above 22,700 in opening trade. Should we quickly look at the indices on the broader markets before we go to stock-specific, movers this morning? And not too much on the Nifty mid-cap, less than about 0.5%. Small cap doing okay. Let's look at what's moving this morning. Strides Pharma is one which has had positive news. They've got a US FDA approval for an antidepressant. Let's talk about 1.5%. Gland Pharma stake sale at a discount to market price, about 7.5% discount, and that has seen about 6% drop this morning because of that stake sale. Sula Vineyard had good quarterly business updates, especially in their wine tourism segment, and the stock up about 4% as we speak. Dixon has announced that it will be acquiring 51% of a company called Ismatu for about 238 crores. But the important thing is that a big revenue company that they're buying into. The stock reacted pretty well pre-open, has cooled off a little in the last few minutes. Godrej Property also stellar business updates. It's another day when realty stocks are doing well. This morning, the Nifty Realty Index also decently up. House sales up 135%, 5.5% up on the stock. They've had a stellar quarter and they've surpassed their own targets as well. So that's one to watch out for through the day. So these are some stocks that are really moving this morning. But like you said, Samina, a clutch of, your 361, your Anand Rathi, all of those also still doing pretty well.
In fact, the non-lending side is actually looking pretty good across the broader markets. And let's pull up the mid-cap and the small-cap index and see what the moves are looking like. The breadth is not bad, and I think that's what we're taking heart from right now. The mid-cap space that underperformed in trade yesterday is up about 0.3%, performing largely in line with the benchmark. It is the small-cap index that's not doing too badly. Micro-cap stocks sold off in trade yesterday. A quick check on how they're doing in early trade this morning. Marginally higher is what we have. In terms of your stock movers, the top trade on the broader markets is Sterlite Tech. It's up 6.5%, followed by Godrej Properties that we've already highlighted for you. But Anand Rathi, 360, Nuvama, IIFL Finance, if I can pull that one up, it should be useful to get a sense of what they're doing. Anand Rathi is up 4.5% on back of that buyback. IIFL Finance continues its upward journey. Another 2% being added for the third straight day running. Nuvama as well. And 361 up about 3% in trade as we see it. The Sensex has it 75,000 and the street is looking very, very euphoric as we see it on this very auspicious day. Dilip Bilkon has emerged as an L1 bidder for a 1,000 crore project. I did say that the company is a big player, but the order, of course, is what's driving the counter. 4% high on Dilip Bilkon from the get-go. It looked pretty solid in early trade. Well, apart from that, you've got a few other mid-cap pharma names that aren't doing too badly either, but on the sell side, Gland Pharma that Tamanna highlighted is your biggest loser, down 5.5%. JSW Energy, we're connecting with the management shortly, but the stock is down 3.5%. You've got Varun Beverages, GCPL, some of those other names like Marico, Colgate, FMCG continues to have it tough in today's day of trade.
Sterlite is popping this morning.
6% higher. Sterlite Technologies is the one.
No, not Sterlite Technologies. Sterlite is up about 8%. Right now, and that stock is having a good morning. Yeah, and NLC, Canfin, all of those doing pretty well. We have Rahul Sharma now with us, Director and Head Research, JM Financials, just to get a sense of market direction. Rahul, very good morning, and it's definitely a festive morning on the markets, and we're seeing that with new levels being crossed on the Nifty and the Sensex. Are we seeing a sustainable phase right now in the next few weeks in the run-up to the elections?
Yeah, best wishes for the festive day today. Definitely, it is record levels for Nifty and Bank Nifty, and the way this pullback has happened, especially in the last few trading sessions, the broader market has participated. We've seen mid caps and small caps recover in a big way, and at the same time, large caps which were resilient have now turned into outperformance. So my sense is this up move is here to stay. In the very short term, 22,800 might see some profit booking, but 23,000 is something that we are eyeing for in this up move. So stay positive on the index as long as there is no reason for the markets to correct in a big way. We feel there is a lot of momentum to be had, especially in banks. So historically, banks have enjoyed a good month in April, and we feel this month should also not be any different. So positive on banks, positive on real estate, and at the same time expect especially the private banking names to play catch up in the next few trading sessions.
So positive on banks, positive on real estate, both are doing very, very well. What about on IT? Rahul, you're seeing Infosys do well today. Wipro is recovered. They're going to sort of kick off the leg of result season. Would you like anything here, or is this a space with too much uncertainty on the horizon?
Yeah, it's good to be a trader in IT at this point in time because the risk reward is very favorable. We've seen the IT bouncing back from crucial support areas. TCS especially looks pretty solid at these levels. And in fact, the entire IT pack should find a reason for a bounce back from these levels, especially if there is any surprise in the quarterly numbers. So my sense is it's best to be a trader for the very short term. The macro picture is still not clear, so probably we'll wait for a bit to make investment commitments. But from a short term perspective, I think there is some momentum to be had around the results.
Rajat, very quickly, market opens at record high as expected. What do we not have Rajat Bose with us anymore? Okay, I think Rajat and Aditya have been thanked. But Rahul, if I had to ask you, fresh buys, everything that looks promising looks expensive in these markets, and I think valuations is a different discussion altogether. But in terms of fresh buy calls, if an investor is looking to allocate in the markets today from a 1 to 2 year time horizon, what sector or what stock would he be buying?
Yeah, so like I said, it is the banking and realty space where we feel there is more upside to be had. Now, on the real estate space, especially because we've seen some very good pre-sales numbers from the real estate players, and the realty index is also pretty, shaped pretty well. So one can look to buy DLF at this point in time. We feel there is 20 to 25% upside to be had over the next 12 months. If you're looking for something in the mid and small cap space, you could look at Rustomjee, which also presents a very good setup on the long-term charts. On the banking space, I think there are two banks to keep an eye on. On the PSU banking space, it is SBI, which we feel can do good over the next 12 odd months. And on the private banking space, it is Axis Bank, which looks pretty solid at these levels. So these are two sectors where one can look to, keep an eye on. Not only the technical setup is good, but there is a lot of tailwind, especially in terms of fundamentals as well, where we feel, these stocks can outperform the market going ahead into this new financial year.
Looking ahead, fintech is a space that looks good, or anything tech related. I'm also going to put in Zomato in that same lot because they all made a fresh 52-week high yesterday. Zomato, PB Fintech, do you track either of these counters? And if yes, from a medium term time horizon, are these counters one should add to their portfolio? Because if you're looking ahead, I'm guessing new age is still a theme.
Yeah, absolutely. So Zomato is something that we've covered and also tracked. So, maybe another 10% upside from current levels, around 225 is where we are looking to book profits. We have recommended this in the past few months. And we feel that, there is, slightly that more upside left that is left in this counter. Ideally, this space is, better looked upon if there is, a sizable, dip or a correction that happens. At this point in time, we would not recommend putting in fresh money.
All right. So maybe not fresh money in some of these counters. What about your real estate piece? And you look at a Godrej property firing this morning. What we've seen so far, Rahul, in terms of all the business updates has been pretty good. Do you think that the run-up has, reached its peak or a lot more left?
Yeah, so a few months back, the realty index gave a decadal breakout, and whenever such breakouts take place, the moves are generally at least for 12 to 18 months. So we're just 6 odd months into this up move, and we feel that there is a lot more upside to be had. Speaking in terms of blue sky territory, yes, the stocks have entered into uncharted territory for sure. So it's a bit difficult to predict what kind of price behavior would be there. But as far as the tailwinds are there, especially from the company updates, the kind of sales that these guys are doing, I think the trend should remain positive. Godrej, speaking of Godrej properties, this stock can easily head up to 953,000 in this month itself. Whereas something like a DLF can be looked upon for a 10% upside on an immediate basis. So for the month, I think the DLF is the better bet amongst the real estate space. And, it's a good time to be, stay invested in this sector, which has definitely, more long legs than the rest of the market.
Right. One sector, Rahul, that we were all very excited about a few years ago, and that's the specialty chemical space. Now, of course, what we've seen in the last 2 to 3 years, it's been disappointing, the China factor, the fact that the numbers haven't kept pace with those valuations. This time round as well, it's going to be a weak earnings quarter amid a demand slowdown, subdued pricing. But if you've got to call a trend, would this be a good time to start accumulating a few of those specialty chemical names? And I'm also going to add Archean Chemicals to this because I know this one is a little bit of an outperformer in some sense.
Yeah, so chemical is, a very, very vast sector in India, and, the number of companies are, too big. And this sector has been under a lot of pressure, especially in the last 12 odd months. My sense is, it is still not completely out of the woods. We may see short-term sparks here and there, but the major trends have still not reversed, and we are probably 1 or 2 quarters away from, probably this kind of, reversal happening. But having said that, some of the stocks, like for example, Deepak Nitrate is something which has, relatively held on to its ground, and the stock has been broadly sideways in the last 12 to 18 months time frame. So, we are keeping an eye on the sector leaders. If we see green shoots or any sort of, shift in, either the volumes or in case there is a big delivery quantity change that has happened, we'd be keen to, explore onto the same. At this point in time, we are keeping it on a wait and watch list. Probably some more development happens, and post that we'll be able to, hopefully the Q4 numbers could bring in some surprise, and that should keep these stocks moving.
Absolutely. Thank you so much for that, Rahul. We're speaking on a day when, Nifty just about managing to keep up the 22,700 levels, looking tough right now, might slip back down. So some of those gains are being given up, but IT is what's firing this morning. IT and auto, that's the theme that we are seeing. And a very interesting conversation on IT coming up with Debashish Chatterjee of LTI Mindtree on the other side of this break. Stay tuned for that.
Welcome to NDTV Profit. We're currently in the midst of a storm for the IT sector, some would say. But for good reason, this sector has been the sunrise sector for over 2 decades. Today, we are in conversation with the big boys, the CEO of LTI Mindtree, talking to us about the road ahead for the company, for the industry, and what lies ahead. Well, we have with us none other than Debashish Chatterjee, more fondly known as DC. Thank you very much, DC, for joining us today on the show. DC, we are currently in the midst of a rather tough period for the IT sector. For good reason, this was called the sunrise sector for over 2 decades. It's the only sector that's done positive returns, even in terms of equity markets, for the last decade or so. But times are changing, situations very different on ground, challenges persist, and it doesn't seem like we're bottoming out just yet. In the case of LTI Mindtree, there are different moving parts, right? You've had a significant merger which made headlines, now finally behind you, if I may say. What, according to you, were the highlights and what were the risks, the challenges when you're going out with those objectives of merging the 2 entities? Do you think you've navigated that and it's only forward looking now?
So first of all, Samina, thank you for having me on your show. If you look at the unique proposition about these two companies coming together, I don't think there are too many situations where two companies of equal size, size, came together. And if you look at the integration that we did for erstwhile LTI and erstwhile Mindtree as LTI Mindtree, I think it was done in a record time of 6 to 7 months. Of course, there were challenges. The very fact that two companies of equal size, there are a lot of advantages, but there are a lot of challenges. You need to ensure that culturally these two companies integrate well. I was very keen to drive the culture track myself and driving right from the top. But overall, I would say the integration has gone extremely well. The clients, the partners, the employees at large, everybody is very excited about the merger because it offers a lot of opportunities. If you look at the number of clients we have as a merged entity, we have 700 plus clients. The unique thing about the merger is that only around a handful of 10 clients who are common customers. So which means that we have a huge cross-selling and upselling opportunities into the remaining clientele that we have. So overall, the merger is behind us, the integration is behind us, and we are all excited to see the opportunities that presents in the medium to long term.
Yeah, and DC, I'm going to take a cue from that because when you did the merger, you talked about exactly this. The primary objective was revenue growth, cross-selling, upselling, and the fact that there was such little overlap, the opportunities were so much more. Now, a few months out after the complete closure in that sense of the deal, deals are still not flowing through the way I guess you'd like. Do you think this is an industry phenomena because the timing of it may not be ideal, or do you think more work needs to be done as a merged entity to go out and acquire those big deals?
So let me address that in two ways. First of all, since you mentioned timing, I must also call out that when it was decided to bring these two entities together, the only consideration was that we will bring these two companies together when both the companies are doing well in their own rights and both performing very well. So when we brought erstwhile LTI and erstwhile Mindtree together, both the companies were doing extremely well from a profitable growth perspective. So we never tried to do time the market, let's put it that way.
And nobody saw this coming.
Nobody saw this coming. So we were very happy to do the merger, get the integration out of the way and think of what we need to do. Now, the second thing which I want to highlight is you look at the kind of work that both the companies were doing through the pandemic. What pandemic did, it was a lot of discretionary spend that came on the table and all the IT companies latched onto it, that including LTI Mindtree. And post the pandemic, when there was a bit of a slowdown, cautiousness in the marketplace, bulk of the work which was transformation kind of work, which is discretionary spend, that started slowing down. And instead of that, most of the work that we are talking about are cost takeout and efficiency. Now, this is a thing which we need to appreciate because both the companies where LTI Mindtree per se is now changing from a stage of transformation to the cost takeout.
Efficiency.
Now, what happens with the cost efficiency deals? First of all, these are longer tenure deals, which means if you talk about efficiency, it has to be done over a period of 4 to 5 years. You cannot do it in 1 year. And when you invest in these kind of deals, it involves rebadging, it involves some transition. So the first year is always going to be challenging in terms of the revenues kicking in the way you want. But over a period of time, they kick in. So when you talk about the deals that we have signed in the last, say, 12 months, 9 out of 10 deals are all on the cost takeout. So which means that once these deals start ramping up in the way we want, it will definitely, it's more forward looking in terms of the revenues as well as the margin. But having said that, where is the challenge? The challenge is in the macro, we never expected that the decision making will be so slow. When clients have taken a decision to award a project to us, when we start ramping up, the ramping up is also slow. So some of these factors are not helping anybody in terms of ramping up the deals the way we wanted.
And this is not company specific. It is an industry-wide phenomenon.
Well, I can definitely tell you that we are getting, we had our share of situations where the delayed decision making has impacted our growth. And yes, you can say that I'm sure others are also facing the same situation. But profile of revenues or profile of deals that we have, since they are mostly cost takeout now, shifting from a transformation play to a cost takeout play, we are going through that transition.
So, and help me understand this, right? In a more sort of ballpark, if I may, you've got operational efficiency, which is cost efficiency, and you've got transformational. Your strength as a company sits with transformational deals, right? And you said the chunk of the deals coming in are more cost efficient. What happens going ahead? Do you think transformation would come back and pick up? Because I'm assuming these are far more profitable in nature. If they are they more profitable?
Well, I think both are profitable.
So you're okay doing both in terms of profitability?
You have to do both. You can't do one. And again, I will just give you an anecdote. If you look at what happened in 2008 during the subprime, after 2008 financial crisis, nobody was talking about discretionary spend. But if you look at 2009, 2010, there were quite a few large deals which were announced, which are all cost takeout. Look at what happened in the pandemic. During the pandemic, nobody talked about cost.
No, it went back.
Everybody was talking about discretionary spend, migrating to the cloud, so on and so forth. So there are phases where people are more focused on discretionary spend, transformation. There are phases when people are focused on cost takeout. But there was an interesting phase after the pandemic when things started slowing down. We had customers who were actually talking about, can you do both? Can you do cost takeout? Take the dollars out, which will help in terms of funding the in-flight transformation, because they started the transformation.
So if you're saving money, you reinvest it back into the business.
So there was a phase like that. So we were also benefited by that phase. But
and that's
right
a sweet phase for a company like yourself.
But now it's again tilted back towards cost takeout. I'm sure transformation will come back at some point of time. But to the larger point that I wanted to make is, as a company, as an organization, your strength should be such, your capability should be such that you can do both.
So you've got to be a little nimble as well in that sense.
You have to be absolutely nimble, and if you cannot do both, you cannot survive.
You know, you set out with fairly ambitious revenue targets as well. Just before the merger, you were at $4 billion. I did read somewhere where you said you'd like to hit $5 billion by the end of FY25. Of course, we didn't anticipate the slowdown taking so much longer. You think you're getting close to that number? Because as it stands, it looks like it still could be a few quarters out.
No, I think we have already, in the last quarterly results, we have indicated that, our overall game plan that we have in terms of the long-term vision of the company, that is intact.
Okay, great.
For example, we are, as a company, the vision that has been laid out by my bosses, Mr. Naik and Mr. Subramaniam, it's very clear that we want to become a $10 billion enterprise at some point of time. That doesn't change. Now, $10 billion will not happen through only organic. There will be some inorganic as well, acquisitions as well. But it's a long-drawn plan. But if you lay down a plan, then you need to move towards that plan. What we called out in the last quarter is that we had some margin goals, etc. But we said we are going to pause it for some time because it is not possible the current scenario to pursue that. It will be delayed by a few quarters. That we called out.
And I mean, your returns or your profitability is a function of the industry. So the industry is not growing. There's no way you're going to beat that by a margin, right?
Profitability is also a function of the top line that comes in. So if the top line is not coming the way we anticipate, then obviously we cannot push the profitability levers so much so that it impacts the growth.
Compromises on cost.
So we don't want to we want to have both. So for the time being, we can probably pause in terms of maintaining the profitability where we are. We can continue to get the growth back and profitability will come back. But at an overall level, since you talked about a specific number, at an overall level, we still have an aspiration. We have not given a timeline, but we are putting all the engines and all the machinery in place to ensure that we can go to a $10 billion over a period of time. And the journey that we want to embark on, it should be a profitable growth journey.
I'll talk to you about the glide path, the $10 billion in a minute, but now you're part of the big boys club, right? I mean, you're the big guys in the IT pack. And I'm sure you're getting a sense of what's happening on a political front. The US is going into elections. Times like these, spending, decision-making is usually delayed. What are client conversations looking like right now? Are they committal? Are they avoiding conversations? Is it all still very... Because we hear some people say there are green shoots, but the reality is that's not reflecting in actual deal conversions.
Well, I would say that the client conversations are still going on the way they normally go on. We are working on deals. Especially cost takeout opportunities, they're going on. There are a couple of situations where it's a combination of cost takeout as well as transformation, as I said. But what we are witnessing in the market right now is definitely there is a decision making which is slowed. It is a slowdown in terms of decision making. Customers are very cautious. I mean, I'll give you an example. If you look at the financial services industry, it's an industry which depends on a lot of regulations. Now, some of the regulations means that you have to do a lot of discretionary spend to make sure you're compliant with respect to. Now, if you are talking about a scenario which is uncertain, where you're waiting for the next the election results
You're not
to be
going to make
announced,
any of those commitments.
you probably will anticipate some regulatory changes in some areas. So in that situation, why would a client try to spend a lot of money in discretionary at this point of time? They will rather hold back and wait. So those are the kind of scenarios which we are witnessing. But when it comes to cost takeout, I mean, many clients have grown their businesses through a lot of M&A. I mean, there's a great opportunity of taking some cost out of the system. They're focusing on that. So clients also decide what to focus on at what point of time. When their businesses are growing, they may not be focusing too much on cost takeout. But right now,
so
it's a great opportunity.
Bring the house
consolidate, bring the house clean,
up.
which will help them simplify the structure, make the whole estate very simple. There's a lot of technical debt in all those estates. Why don't you take the technical debt out? So those are the kind of things where clients are interested.
So, when you have these conversations, DC, while we're all waiting for the outcome of the US election, would it be a fair assumption to make that it's only a matter of time that these conversations actually convert into real commitments, putting pen to paper?
Absolutely. I think it's just a matter of time.
So maybe 2 to 3 quarters out, I think that's a realistic
that could be potentially the way to look at.
That's a best case scenario, you think?
I don't think we can say that because we still have to wait. Yeah. But bottom line is that even if we are talking about some of the macro in the US, whether it's the interest rate or the elections, etc., but there are clients who are still working on GenAI, for example. They are doing a lot of pilots with us. A lot of use cases are being built around GenAI.
I'm so glad you bring this up because that's what I want to talk to you about, AI. We now hear it ever so often, right? I think that's the only conversation that happens in schools when children are learning robotics, or I think older people are trying to just figure out what this really means. What does AI mean for LTIMindtree? What is sort of commitment, contribution you're making to this? And what will this mean for shareholders? So while it may improve, will it improve numbers? Will it help you bag bigger orders? Couple of years out, tell me, from a shareholder of LTIMindtree, why is this important for me?
So as I said, these are the early days, but huge potential. And I always believe that if you're talking about a new thing, area like a GenAI, you need to become the customer zero for GenAI within your organization as well. So which means that within LTIMindtree and the larger L&T, can I develop certain use cases which I can use for my own
improving my own company.
Like for example, we are doing a lot of application of we have already implemented GenAI in terms of policy administration, which means that if you have HR policies across multiple geographies, earlier you will be kind of doing a lot of searches, a lot of comparisons and all these things. But if you can develop the LLMs in the right way, large language models in the right way, you can actually do that much faster.
And if this works for you as a client, then this is exactly what you go out and sell to other people.
So essentially right now, if a client comes to my organization for a GenAI demo, I actually give a demo of what we have done within the organization. Take a slightly larger picture. Look at L&T as a engineering and construction conglomerate. There is so much of knowledge sitting over there. Why can't you create a LLM around engineering by leveraging the knowledge that sits in L&T? And why can't we build that and take it to the external clients around the world? So those are also some of the things that we are trying to do.
And this is again sector agnostic, like we said, right? Or vertical agnostic?
It will be, there will be a generic part which is sector agnostic, but there will be also specific sector-wise LLMs that we'll be building as we go.
And how should I say this, right? So while this will improve the company as a whole, because of course you are a case study and a client to LTIMindtree yourself, but when you go out and sell this in terms of objectives or in terms of numbers that you're putting out for yourself and your team, what contribution of AI-led business would you expect your top line to come from? And I'm not asking you 1 quarter or 2 quarters. Let's talk 5 years.
Yeah. So I will tell you, I have a slightly different way of looking at this problem. What we have to understand is that when you create a solution for a client, or try to solve a problem for a client, it's an end-to-end solution. It has got multiple building blocks, and you have to touch all the building blocks to solve the problem. GenAI will be sitting in 1 or 2 of those building blocks. But GenAI is not going to be the entire only building block. It cannot be just entirely through GenAI. So essentially, when you talk about what will be the revenues coming from GenAI, it's very difficult to call it out.
Would you say contract value would improve?
Well,
because you're adding that service?
Well, I think it depends on the specific situation.
Yeah.
All that you know, the contract value, it may come down also.
Because there's lesser
you may have to
of
cannibalize your own revenues
yeah.
to kind of give the benefit back to the client. But if you are able to do that and client sees value, maybe more work will come your way.
It's a tightrope to walk, DC.
It's a tightrope to walk, and it's the same thing that happened when cloud came into play.
Yeah.
When cloud came into play, a lot of people were concerned about what happens to the on-prem. And all the on-prem was moving to the cloud. So we had the same concern over there. I don't think the business has gone down. More cloud adoptions happened and the companies are thriving.
Yeah.
So my view is that there will be always a change. A change is always change is the only constant. It's refreshing. But every organization will be required to develop different kind of skills and capabilities to tide over this. Because you need to train your people on various new skills. Prompt engineering. We did not know about what is prompt engineering because if you are talking about leveraging GenAI, you need to use the right prompts to get the right results. So you have to have prompt engineers. Then you are talking about Copilot as a model, and you have the Copilot. And why are we calling it Copilot? Because Copilot is assisting me to take some decisions, and I have to also train
it's
that.
Not the pilot. Yeah.
I am trying to train that model. So there will be model trainers as another
Are you
role.
making significant investments in GenAI?
We are making significant investments. We have already made a lot of investments in a platform.
Can you quantify that for me?
I don't think I can quantify that, but I can tell you that at this point of time, the best investment that we have done is a Canvas.ai platform that we have built. And what it means is that we have got this platform where I can encourage my clients to work with me in terms of creating a specific use case, which could be on the revenue side or the efficiency side or the engineering side, any of these areas. And if I can do that, because clients will not have access to all the LLMs that's available. But I have this platform where I've made
it's a little bit like a buffet, right?
And it's buffet, and I have all the options available, so I can work with the clients and we can see what works and what does not work.
And that's happening? Are you seeing that convert into revenues and deals?
That's happening. That's what I meant to say, that some of the use cases have gone into production as well. But it's slow. I mean,
So they turn revenue creative maybe a couple of months down the line, maybe a year down the line.
Yeah, because they're all waiting for the use cases to mature. Because I think you have to also understand there's a lot of data play over here. So when you talk about Gen AI, you have to also build the right LLMs for the clients, which takes time. But once you are convinced that it will work, it will also, the customers' business models will fundamentally change. The way they used to run their business model, they have to reimagine their business models. So it will be fairly disruptive.
That requires bravery as well.
Exactly. So essentially, clients also will not do that unless they're absolutely sure.
Yeah.
But where we can help the clients is let them come on our platform, look at the options available, and then let them choose in terms of what could be ideal for them.
Also, just one last thing to wrap this conversation up for your shareholders, your retail shareholders, of course, not the very big significant ones. 2 to 3 years out, what is it one thing that you want to tell us that we should be watching out for, and why LTIMindtree is a force to reckon with at this stage?
Well, I think the one of the most satisfying aspect of my journey in the last 4.5 years has been the phase where I could do consistent profitable growth. Yeah. And I would like to get back to that phase. And it may take a little time, but I'm sure we can do that. And that's the best thing that I can offer to any shareholder.
Thank you very much, DC, for joining us today and talking to all our viewers and your shareholders, stakeholders about what's in store for LTIMindtree. Thank you.
Thank you so much. Thank you for having me here.
Thank you.
Hello and welcome to NDTV Profit. I'm Vikas Srivastav, and today we are joined by two gentlemen, Mr. Sharad Mahindra, who is the Joint Managing Director and CEO of JSW Energy, and Mr. Pritesh Vinay, who is the CFO of JSW Energy. The company has raised 5,000 crore rupees in QIP, which is billed as one of the largest or largest in the history of India's fundraising as far as QIP is concerned. The company is gung-ho about renewable energy business and plans to use this fund, majority of this fund, in this business. Welcome to NDTV Profit, gentlemen.
Thank you. Thank you very much. Thank you very much.
Sir, I would like to begin with you, Mr. Mahindra. If you can take our viewers through this fundraise, and if you can talk about the significance and what kind of role it will play as far as the growth strategy of the company is concerned.
Right. Yes, Vikas, before I come to the fundraise, it is important to understand how the sector is evolving, how it has been in past few years, and what it looks like going forward. When we see that the way Indian economy is growing, one of the fastest growing large economy in the world, and there has been a perfect correlation between the GDP and the power demand, maybe close to 1:1. But in last 3 years, if we see, when the GDP growth has been 6.5–7%, the power demand has grown in the range of 8 to 10%. So it is maybe 1.2 times the GDP. And it has been seen that when the GDP is in the range of 6.5 to 7%, this factor is in excess of 1. And the way we have just seen that again, for this current fiscal which has just started, RBI has again said 7% growth. So we are confident that power demand growth will continue to be good. And when we see FY22, if we see that the peak demand was maybe about 203 gigawatt. And recently the number has come, summers have started, that this summer this peak demand is expected to reach 260 gigawatt, from 203 gigawatt to 260 gigawatt, which clearly demonstrates the need of incremental power. And the incremental power majorly with Government of India's clear goal and target of achieving in excess of 500 gigawatt of renewable energy, this means a huge capacity addition year on year, which has been demonstrated also if we see the year which has just ended, FY24, almost in excess of 40 gigawatt of bidding, close to 50 gigawatt in fact, bidding has taken place, which means that the Government of India's target of adding 50 gigawatt every year is we are going to see now happening also. All these things put together, we at JSW Energy also, if you recall that about 2 years back, we announced our strategy 2.0 of reaching 20 gigawatt by FY30, which was then divided into 2 phases, saying that by FY25 we will reach 10 gigawatt, and then by FY30 another 10, taking it to 20 gigawatt. I am happy to tell that the year which has just ended, we are at a capacity of 7.2 gigawatt, close to that we have ended the year. And in excess of 2.6 gigawatt of work which is already happening on various projects, we are absolutely confident that our phase 1 of 10 gigawatt which we have announced in the market to reaching by FY25 will definitely be achieving or slightly surpassing that. Then another 10 gigawatt taking it to to 20 gigawatt by FY30. Here the way things have evolved in last 1 year, and we have seen that the opportunities which are there, which are favorable, which are conducive in terms, we started participating in the competitive bidding in a big way. And in the last 60 days, we have won at a very attractive tariffs, a capacity of 3.7 gigawatt in last 60-65 days only. And with our group captive requirement also, everything, we have an order book of in excess of 6.5 gigawatt, which we have to execute. So 20 gigawatt FY30, we are absolutely confident, and we are quite sure with the changed environment that we will be accelerating the growth and will be reaching 30 gigawatt significantly earlier, maybe few years earlier than FY30. Okay. And to accelerate this growth, this QIP, for which maybe my colleague Pritesh will speak more in detail, this QIP is a major enabler for us to accelerate the growth, which we see as a huge opportunity in the country and for JSW Energy, giving our investors, giving our shareholders attractive returns also.
Welcome, you're watching Talking Point. I'm Tamanna Inamdar. Today the case for our chat is this election rally that we're seeing. Is this already a pre-election rally? We're seeing the markets run up consistently in the last few sessions and really not in tune with anything that's happening globally. Is it election buzz that we're seeing playing out? Also, another question that we're going to ask today from our expert is whether we're seeing signs of recovery in rural consumption. Are those now visible? And do BFSI businesses updates hint at a great Q4? Remember, all of the business updates we're getting in the banking space, especially in lieu of deposit rates and deposit growth, is looking fabulous. Now, To join us in this conversation, we have Saurabh Mukherjee, Founder and Chief Investment Officer, Marcellus Investment Manager. Saurabh, always great to speak with you on NDTV Profit. Welcome back. And let me begin with the first point that I laid out. Are we seeing a pre-election rally, a consistent up move fueled by domestic investors as far as the fund flow data, etc. goes? What is the bet on, considering that the election result has in a way been priced in by the markets?
I think part of the rally, Tamanna, is that Indian large caps are very realistically priced. I mean, we haven't seen a blazing rally in Indian large caps over the last couple of years. So valuations are very reasonable on large caps. Secondly, you're seeing clear signs of economic growth stretching out over the next couple of years. Corporate balance sheets are under-leveraged. Banking system balance sheets are the best shape they've been in 20 years. So the combination of very reasonable valuations on large caps, strong corporate balance sheets, strong banking system balance sheets, and the early signs of a private sector capex cycle. I think those are the core drivers of the rally. I'm not so sure elections are front and center in driving the large cap rally here.
The large cap rally is fueling the markets, and like I mentioned, this is not really on the back of any superb FII participation. Is that something that we could see post the 4th of June once this event is ticked off and done with?
So it's clear from talking to FIIs that they are getting their thoughts together. They're probably getting their